Hey, you wonderful people out there. Chris here from the Business Report Show. So happy to have you here today. Now, before I begin, as a disclaimer, I am not a financial planner or advisor, and everything I say in this video is just my opinion and for education purposes only. Make sure to speak to an advisor before you invest, as everyone's situation is different. All right, welcome to this first installment of 3 Minutes for Investing, a video series where I attempt to cover one investment topic within 3 minutes for you. Now to the topic of today's video. ETFs are also known as exchange-traded funds. This unique investment vehicle was actually first launched in Canada. I'm so proud. And it changed the investment landscape when it came to pooled investing. Now, before I get into ETFs, let's get the 3-minute timer started. If we go back to early days of stock investing, investors would need to have enough money to buy full shares of a company. In some cases, there were minimum share requirements before you could even invest in one company. With the growth of the retail investor base, brokers and fund managers needed a way to attract new investors and make more fees so that they could devise a structure to create a fund that would hold a basket of companies. As an example, if I had $1,000 to invest, at today's share price, I could only buy about 4 shares of Microsoft and would have nothing left over to invest in any other companies. It would be really hard for me to create a diversified investment portfolio. Now, whereas I could take that $1,000 and invest it in a pooled fund that held shares in companies like Microsoft, Apple, Amazon, Nvidia, PayPal, making my overall investment much more diversified. Now, there are 2 main types of publicly traded funds. One is called a mutual fund, which I'll leave for another video. And the other, of course, is today's topic, ETFs. The main difference between the two is that mutual funds are actively managed by a fund manager and ETFs are not, meaning they typically hold onto a fixed group of companies that don't actively trade the companies, which mutual fund managers typically, on the other hand, do. Now, in return for less active management, the annual fees charged by ETF companies are a lot lower than mutual funds, somewhere in the 0.5% range versus the typical 1.5% to 2% that some mutual fund managers charge. What's cool about ETFs is that they offer diversification amongst themselves. For example, there are ETFs, just like in my previous example, that hold a basket of technology-only companies. Others follow the major indices like NASDAQ or the New York Stock Exchange. Now, some are also created to track commodities like oil and gas, gold, and most recently, cryptocurrencies. So again, the same theory applies here. Rather than having to invest large sums of money into some of these investments, or rather taking high risks in commodity contracts like oil and gas, you can buy shares of an ETF for a relatively low amount of capital and trade them freely as you see fit. Now, another cool feature is the ability to invest in certain assets that you would normally not be able to in tax-free accounts, such as in the US, the Roth IRA or TFSA here in Canada. Now, do you like shorting shares? Well, there's an ETF for that as well. Again, if you don't have a lot of time to manage your portfolio or have fears about shorting stocks, you can just buy shares in a short ETF, which emulates the movements of shorts. Do you like to earn dividends? Well, there's an ETF for dividends as well, and some of those pay pretty high yields currently. While you can still experience losses when it comes to ETF investing, it does offer a unique way to get exposure to a diverse basket of stocks with minimal capital. Plus, for those who just don't have time to actively manage their own investments, a good strategy might be to just continue adding more shares of an ETF for the long term and not worry about the day-to-day fluctuations. Well, that's it for this episode of 3 Minutes for Investing. I hope it gave you enough of a high-level overview of ETFs to help you get started. And if you do want some more information, a good starting point is to look at some of the few large ETF companies to see what's available. Some of these companies include iShares, Horizons, Vanguard, and BlackRock. I put the links below for the websites for your reference. Now, if you like the video, make sure to hit that subscribe button, as every little bit helps, and click that bell button to make sure you get notified the next time I upload a new video. Thank you for watching the Business Report Show. Remember to always be learning, always be investing. I'll catch you in the next video.